Good morning, good morning, everyone. My name is Janine Hunter. I am the Assistant Vice President for Community Lending at United Community Bank. And what we're going to talk about this morning is our No Credit Score program. Now, this program was developed for people who are credit invisible. And what we mean by that is individuals, when I pull their credit bureau report, there is absolutely nothing there. There's no score, no trade lines, nothing. It's just name, date of birth, social, and comments to state the fact that there is no active credit on the credit bureau report. So what we did is the bank created this program to help people because primarily low to moderate census tracts, as well as minority communities, are credit invisible. They created this opportunity for them to be able to have homeownership because these people, while they do not have traditional credit, they do have non-traditional credit. And what we mean by that is they pay rent, they pay utilities, they pay car insurance, they pay cell phone bills, they pay juniors AAU payments or instrument payments. They have daycare expenses, and these are expenses that they pay on a monthly basis. So the bank created this program because if we can get letters of credit reference from these individuals, so if we can get letters of credit reference from the cell phone bills, the utilities, the AAU payments, the car insurance, or we can extrapolate them from their bank statements, meaning everything is going through the bank account and we can pull it that way. Then we can go ahead and give them this loan. It is a conventional mortgage. It's a 3% down program. It does have mortgage insurance. And with this program, it does allow them the opportunity for home ownership. Now, a lot of people, when we rolled this program out, they called me because they thought that, if they had bad credit, the bad credit could be offset by this program. That is not the case. If you have a credit score, then what we need to do is do some credit restoration in order to get the credit scores up to at least a 600 for FHA or 640 for my no down payment program. And then that way we can get you into the mortgage that way. But again, as I said, this program is for individuals who are, once again, credit invisible, meaning that when we pull the credit bureau report, there is absolutely no score. There's no trade lines. There's nothing there but their name, date of birth, and social security number. Now, I know that there is a lot of credit invisible individuals out there because in my work here at the bank, I do run into them. So especially in your Hispanic communities and in your African-American communities, they just don't believe in credit. And that's okay. But we do need to at least have them to have a bank account. So if they don't have a bank account, then we've got issues there. Also, which means they'd have to go into the bank and establish a bank account. We cannot use Cash App unless Cash App is attached to a bank account. But we can't use it if it's attached to an EBT account or some kind of payroll account that their employer provides, which I know a lot of employers are moving towards that form of payment as opposed to not printing paper checks or people not having bank accounts and going to their local check cashing places and doing things of that nature. So just wanted to get on here and talk about that program. There are a lot of opportunities. The ratios on that is conventional ratios. So we would have to stay somewhere between 28 and 33% of their gross monthly income as their house payment, and no more than about 39 to 43% with house plus debts. So this product does have mortgage insurance. From what I have been told, because I haven't done any of these here of late, the mortgage insurance is not expensive. It's comparable to the mortgage insurance that we quote on our Home Ready 3% down program. So again, this is an awesome opportunity for individuals who, as I said, have absolutely no credit in order to get into home ownership. We just have to make sure that they have a bank account so that we can source their funds for closing, their earnest money, their appraisal money, any other payments that they may be making on a monthly basis. And then at the same time, we can layer down payment assistance if it is available for that 3% down. So Zanine, Shaletta, do you guys, or Gwen, do you guys have any questions?
No, I don't. Thanks.
Uh-huh.
I kind of do. This is Gwen. Hi, everyone. I guess I do have credit. So I don't know if I would even qualify if I do have credit.
So if you have credit, what we have to do is, if you're not at a 600 or a 640 for the no down payment program, then we have to work with you in order to get your scores up to those two numbers.
Okay, yeah, two of my scores, I'm above 640. And one of them, I'm almost at a 640.
Yeah. So in that particular situation, this program would not apply because, as I said, you do have credit scores.
Okay, thank you.
You're welcome. So Pam, do you have any comments about market conditions and what's going on out there and what you're seeing?
Well, the market right now is really good for people who want to purchase a home because you don't have the competition that we had before with the hedge funds. So the market is more buyer friendly now. There's more inventory. There's still an inventory shortage in the Metro Atlanta area, but you have an opportunity, depending on what price point you're in, to purchase a home. Now, if you're in a certain price point, of course, maybe under, I would say under 250. When you're under 250, you might run into some homes that need to be repaired. And Ms. Hunter, she can tell you about some of the programs that you can do if you have a situation where you want to purchase a home, but it needs to be renovated, a small rehab. Can you also tell everybody and ask you said mortgage insurance. Most people don't know what mortgage insurance is. What is mortgage insurance?
Okay, so when we're talking about your mortgage payment, it's made up of principal and interest, taxes, which are your property taxes, homeowners insurance, and anytime that you are putting less than 20% down on a conventional, always on FHA, always on USDA, there is a form of mortgage insurance. And what the mortgage insurance does is it protects the lender in case of default. And what that means is that if a borrower goes into foreclosure and loses the property, then the lender is made whole by the mortgage insurance. So typically on your lower credit scores, when it relates to mortgage insurance in any program except Home Ready. And Home Ready and Home Possible are income-based. The mortgage insurance on a 620 to a 660 credit score for a conventional buyer is very expensive. It can be anywhere from 0.9 to, I've seen it as high as 1.2% of the loan amount. So when you factor in today's interest rates, which are comparable, we're in a normal rate environment, and you factor in the purchase prices of the properties here in Metro Atlanta, sometimes that mortgage insurance can be $300 or $400 a month if you are at a 620 credit score. So in most cases, what I do is I consult with the borrower and I say, let's do FHA, because FHA is always 0.55. Now, the thing about FHA is that the mortgage insurance stays on there the life of the loan. So a lot of people will start off FHA in order to get into the house. And then once they have a 20% equity position, then they will go ahead and refinance back to conventional if it makes sense, other than removing the mortgage insurance. Because I always tell people, anytime that you refinance, there is a cost to doing that loan. So it's either coming out of your pocket or it's coming out of the equity. So it has to make sense in order to incur those costs. So Pam did mention that I do a renovation product. It's called the Fannie Mae Home Style. It is the conventional renovation product. And what happens is with that loan, you have the purchase price of the house, as well as the cost of repairs that you want to do to the house. And then we lend on the after improved value. So Pam and I right now are working with a client who's very anxious to do a renovation product. And I had to tell him that the renovations that he wants to do, the market might not support the renovations. So you can't go into a neighborhood and buy a house at $250, do $100,000 in renovations if the neighborhood is not going to support at least a $400,000 value after the renovations are complete. Because again, we're going to give you the money based upon the market value of the home being renovated. So you never want to go into that situation being upside down, because then we're going to come back to you and say, okay, you got to have all this money out of pocket that typically people do not have. FHA has the same program. It's called the 203K. Again, it's purchase price plus cost of renovations. With the FHA product, however, we are able to lend up to 110% of the after improved value. So in certain price points that Pam alluded to, and at $250 or less, there is the opportunity to do renovation loans. You just have to have your contractors in line in order to make this a smooth process for everybody, because these loans do take a little bit longer to close, just from the standpoint that we have third parties, i.e. vendors, that we're trying to get contracts from.
Okay. Now, Ms. Hunter helped one of my clients earlier this year with a loan that was 100% financing. It was a conventional loan. And my buyer, I think all he needed was $1,500 to come to closing with, because of course I negotiated every bit of closing costs I could get from the owner. I was even trying to get more, and Ms. Hunter was like, no, Pam, you can't get any more from these people. That's the most. So if you can elaborate on that a little bit, what price point is that particular product? And I don't know what the what's FHA's limits for Metro Atlanta right now?
FHA's loan limits for Metro Atlanta right now is $592,100 So that's a loan amount of $592,000. The program that Pam is referring to is our flagship program. It's called the PATH loan. And how the program works is that the home qualifies the borrower. So if the home is in a low to moderate census tract or in a majority minority neighborhood, which that covers Fulton County and all of the surrounding counties, then the house qualifies the borrower for no down payment. Now, the price point on this house is we go up to $500,000. And so the first question that, or I should say the first comment that I get from people when I say majority minority neighborhood is that, well, I don't want to live in the hood. And what I explain to them is that these homes go up to $500,000. So you're not going to necessarily be quote unquote in the hood. There is no income restriction on this program. I've had close 2 months ago, a borrower who made $170,000 and used this program in order to purchase a home. We just have to make sure that the house payment is between 31 and 35% of their gross monthly income, and house plus debts is at 43. The seller can pay up to 3% in seller concessions, which is why I had to tell Pam pump her brakes, because I couldn't get any more money from the seller because the program would not allow for it. But it is a phenomenal program. I did 25 of those loans last year. I'm on track to do about the same, possibly a little bit more because the market has changed. But it's still a conventional mortgage. There is no second lien, because I get that question quite a bit. It's just one mortgage. And there is no PMI on this product. And the great thing about it is the borrower can buy the interest rate down a quarter. And if they open up an account with the bank, then they can get an additional quarter off the rate. So I bought my house because, you know, I'm going to take advantage of every program that I can, like my borrowers do. I bought my home in Conyers, Georgia in December. Moved into a middle income neighborhood, but because the middle income neighborhood was majority minority, I was able to utilize the program and get into my house. I did have funds to put down, so I did put money down, but I got a 5.625 interest rate. Now the rate is higher on that program now, but again, I always tell people that you can't focus on the rate. Let's focus on, can you afford the monthly payment? At this point, it really doesn't make sense to buy points unless you're in a situation to buy points. So I always tell borrowers to make an extra mortgage payment, especially with the cost of rising property taxes, which I'm getting those calls now from borrowers who are struggling because their payments are going up more than what they had anticipated. I'm saying let's not focus on paying principal down right now. Let's focus on making sure that you have enough in your escrow accounts so that when they do your escrow analysis, you're not in a situation where you have a shortage and therefore you have a dramatic increase in your monthly payment. So that's how the program works. I've done this program in Decula. I've done it in Lawrenceville. I've done it in the city. I've done it in Stone Mountain. I've done it in Fairburn. I've done it all over. So what is an escrow account? An escrow account is where we take and set aside your taxes and insurance each month. And then once those property taxes are due, the bank pays it for you because it's sitting there in an account. And then when the homeowner's insurance is due, the bank pays it for you as well. So every 12 months at the date of closing, when you initially closed on the transaction, you will get what is called an escrow analysis. And at that point, they will tell you what your projected increase in taxes and insurance is going to be based upon the previous year's tax bills. And then at that point, they give you at least 60 days before that new mortgage payment becomes due. So as I said, with the client that I had dealt with last week, you know, her thing was she was paying down principal, but her property taxes had doubled and she had gotten a new homeowner's insurance policy, and it was significantly higher than the one that she had at closing. So I encouraged her to shop around for some homeowner's insurance to get it back down to as close to where it was that she had at closing. And then, as I said, we worked out a plan to help her budget in order to be able to take care of her monthly payment. Because again, she had a 3.875 interest rate. So there was no point in going ahead and, because she's like, well, I'll just walk away from the house. I'm like, no, you're not. Don't even entertain that thought, because she purchased that house in 21 at 255. She had a 3.875 interest rate. Her payments with the increase was now at $2,100. I was like, you're not going to even be able to rent something comparable to what you have right now at that price. Not to mention you would ruin your credit. So let's think of an opportunity in order to get this taken care of.
Okay. Well, does anybody have any more questions? How do we get in contact with you, Ms. Hunter? What is the name of your company and all of that good stuff?
How you get in touch with me is I am here in the Georgia market. My primary branch is Conyers, but I service all of Southeast market. So I service Newton, Clayton, Fulton, Henry, Gwinnett counties, Rockdale, DeKalb. My phone number is 317-529-5393. If you have any questions or concerns, you can email me at J as in Jack, E as in Edward, N as in Nancy, N as in Nancy, I as in Igloo, N as in Nancy, E as in Edward, _Hunter at UCBI, that's U as umbrella, C as in cat, B as in boy, I as igloo.com. The bank is located in North Carolina, South Carolina, Georgia, Florida, Tennessee, and Alabama. So I can do any of these programs in any of those states. They just have different parameters. And what I mean by that, for example, in Miami right now, there is a rate special on the PATH program that I do not have in the Atlanta market. So I would just need to be able to see where the bank's footprint is, see if we have a close branch. And then, as I said, if you're interested in the PATH loan, then I would have to see if we can make it work. Otherwise, I can do any of the traditional USDA, VA, FHA conventional programs in any of those markets.
Well, thank you so much. It's 10:25, so we're getting out here before 10:30. Yay! Because I have an appointment at 11:15. But for everyone who attends and for everyone who might see this on YouTube or Facebook, I do have a $25 drawing until I believe tomorrow. That if you look at the video and you fill out the form, your name will be put in the drawing and I'll email it to you. So thank you so much. Does anybody have any more questions? Okay. All right. Well, everyone, I hope you guys have a blessed day. If you need to get in contact with me, my name is Pam Armistead with Stonehaven Realty. Oh, she wants you to repeat your phone number, Ms. Hunter.
No problem. It's 317-529-5393.
Okay. And My office number is 678-975-3262. And I look forward to helping everyone. I don't care where you stay in the United States or U.S. territories. We'll get you what you need so you can become a homeowner. That is my mission for the year. And I want everybody to experience being a homeowner. My family has been, have owned a property for over 100 years. So it's very important. Okay. Well, I hope everyone have a blessed day and we will see you soon.
Bye-bye.
Bye-bye.